Good evening and Assalamu alaikum, ladies and gentlemen. This is Salim Hussain, the Managing Director of BRACBANK, welcoming you to the first quarter earnings disclosure program for BRACBANK for 2022. We are calling from Dhaka, Bangladesh, and it is approximately 8 p.m. In the evening. This is, viewers, a live webcast for our earnings disclosure. And of course, it is also shown in our earnings disclosure portal. This link has been shared with all relevant stakeholders through a press advertisements, website post, and the Facebook post. We are also live with this presentation on our Facebook page. You will see a copy of this presentation on our portal as well. Next slide, please. We've already gone through all this. I won't waste time on that. We plan to take 1 hour to take you through initially a quick update on the economic outlook and the market update for the first quarter, January to March, then business highlights, short highlights from the different divisions, a look at the financial performance, an update from Bikash, and then hopefully 15-20 minutes question and answer session. We plan to finish everything within 60 minutes time. So without further ado, let us call upon Shaheen Iqbal, our treasurer, to give you an update on the market and the general macroeconomics as well. Shaheen, please.
Thank you, Salim. Good evening to everyone. I think economy has strongly rebounded since last quarter of last year, and this quarter also seen tremendous growth in both public and public sector demand. So export has grown significantly, import even grown further, and now with the war, it has become a challenging situation because of the rising oil price and commodity price. Overall, we can see because of higher pent-up demand and higher import requirement, we are seeing more pressure on the BOP, balance of payment, and the reserve. So, like other countries across the globe, inflation has become a big challenge in our economy as well. We do expect to see higher pressure on interest rate cap, and also on the monetary side, like central bank may pursue more tighter monetary policy. You probably know that from yesterday, central bank has raised repo rate by 25 basis points. So there is an indication like interest rate to move upward going forward. We are seeing liquidity is tidying up both for local currency and foreign currency in the market, and government securities yield has moved significantly upward. Taka is under pressure of depreciation. So all indicators showing that like interest rate is going to move upward, and also to contain inflation and overall demand, we really need to move interest rate upward going forward as well. Let's see how things really move forward. Significant challenge in terms of regulatory environment because of rate cap and floor, war in Ukraine, oil and commodity price, liquidity, and then crowding out that may happen going forward as well, because government is going to borrow more, and overall non-performing asset, there will be a big challenge as well. So overall, regulatory side and the market side, things are getting tighter, and we'll be seeing more tighter situation going forward for the rest of the year going forward. Thank you. That's a small brief from my side. After
Shaheen, let's get an update now from Syed Abdul Momen Tomal, business highlights from the SME banking division.
Thank you, Salim bhai. BRACBANK's SME team has done fantastic in 2022. As you heard from our treasury head Shaheen bhai, that the economy actually came out, recovered fully from the COVID. And normally we experience sluggish growth during Q1, but this year our team has got a very strong growth momentum. Actually, the SMEs were expecting a huge sales during this year's festive season, and accordingly, the demand for loans also was very high, which clearly shows that the segment, the SME segment, is clearly out of the COVID impact. And actually, during the festival season, their sales this year was actually same as the pre-COVID time. But as you know, we had major headwinds like the inflation, and the cost of deposits are also going very high. The customer numbers grew by 14% in SME business, 18,000 new customer relationships. Our assets grew by 20% year on year. And this is the first year after a long time we see a 10% asset growth from December numbers. So this is a significant change and significant momentum in our asset growth. Year on year, our deposits have also grown by 20%. But the deposit growth really slowed down during Q1 compared to December. And as I was saying, that there is a pressure on the COD, and our CASA mix has deteriorated, which has resulted in a 30 bips increase in the cost of deposits. However, we have maintained the portfolio quality also quite well. The kind of forbearance related issues which were there last year, we see this year, rather during Q1, we see improvement in 30-day overdue portfolio, as well as the NPL is also, we have seen improvement, and it is quite stable. In terms of our trade business, during Q1, the trade business was not that good. It was also very slow. However, year on year, the trade business grew by 55%, and which has increased our commission income by 40%. And in the government stimulus package loans, we have always been a star, and we continue doing that. Only in Q1, we have disbursed to 257 crores, which is the highest amongst all banks. So with this strong start in Q1 2022, we expect the same momentum to continue. But obviously, a lot will depend on the economic environment. And however, we still think that in the remainder year of this year will be much better for the SME business. Thank you. That's all from SME side.
Thanks, Tomal. Thank you. Let's get an update from Mayul Islam, who is the head of our retail banking division.
Thank you, Salim Bhai. Good evening, everyone. We entered first quarter 2022 with very good retail banking business momentum, and I will cover the major areas. In terms of our customer number, it grew by 11% year on year to 9,51,000, and our deposits also grew by 8% year on year to over 16,500 crores level. We launched the multi-currency debit card in March, whereby our customers can now perform international POS transactions and ATM withdrawals worldwide using their travel quota. So this has been a major convenience which got added to our retail customers. We had challenge on our cost of deposit, which increased by 31 basis point year on year due to higher booking of fixed deposits by our customers. However, it got reduced to 20 bips level compared to the last quarter. In terms of retail assets, we continued to grow, and the portfolio grew significantly by 46% year on year, crossing the BDT 7,000 crore milestone. BRACBANK now holds the largest consumer financing portfolio. Aligned with our strategy to focus on customer subsegments, Dishari loan for teachers has been very successful, with over 1,200 loans worth BDT 104 crore disbursed in first quarter. In terms of asset portfolio quality, our year-on-year PAR figure reduced by 1.4%, while our year-on-year NPL figure slightly increased by 0.2%. Our credit cards book also grew by 15% year-on-year to BDT 893 crore level, with 117 crores of net growth, along with 19% increase in card numbers to reach 239,000 credit cards in the end of first quarter. Overall, we are confident that we are now fit for growth, and we would like to take our retail banking business to newer heights. Thank you. That's all from update from my side.
Thank you, Mahi. Let's now get an update on our corporate banking division from our Deputy Manager, Managing Director, and Head of Corporate Banking, Tariq Rifatullah.
Thank you, Salim bhai. Good evening, dear viewers. During the first quarter of 2022, I should say corporate banking division has achieved satisfactory result in all areas. First of all, I would like to focus on deposit portfolio. As influence of COVID is diminishing, we anticipated a major growth in economic activities. As such, strong liquidity will play a crucial role to support our balance sheet growth. So we have acted prudently. Around BDT 1,512 crore taka growth achieved in first quarter 2022, which is actually 63% growth in year-to-year basis. To achieve the portfolio growth and to support the growth portfolio growth of the bank, Team Corporate significantly contributed the liquidity support, and for which incremental TD or term deposit pie had to be accepted, and for that actually we our cost of deposit increases slightly. On the loans and advance part, we have focused on growth through acquiring new accounts and enhancing limit utilization of key relationships in line to our risk appetite. The result has been satisfactory as portfolio growth is around 16% year-on-year basis. Industry average was 11 to 12%. Total 12 quality accounts were onboarded in the total aggregate limit is around 2,100 crore taka. On the other hand, trade part, one of our key focus area is to grow our international trade business, as our mission is to be the preferred transaction banking partner of our customers. Our focus on trade business given tremendous results as overall trade volume grew by 57%, much higher than the country's trade growth, which was around 40% year-to-year level basis. So we expect this growth to be continued in the coming periods as well. On the portfolio side, we have not been complacent at all as we have been maintaining high quality of portfolio health and monitoring. Overall portfolio monitoring and vigilance activities strengthened to minimize the PAR and NPL, and that gave us a good result in the first quarter. Around a significant amount also recovered from the stress portfolio that is also contributed to our bottom line as well. So we'll continue our strong effort to de-risk and strong monitoring to maintain the portfolio health in the coming days. Going forward, our key focus will be as usual, as we have already highlighted, strengthening our liquidity side, growing the loans and advance portfolio in line with our risk appetite, and consider the macroeconomic condition to enhance our digital capabilities that we have already onboarded a digital platform and new products to be launched in line with the customer's appetite. So overall, first quarter was good. Looking forward to a good result in the coming days. Thank you so much. That's all from the corporate banking division.
Thanks, Tarek. Let's get an update from Shaheen Iqbal, Head of Treasury and the Financial Institution Division.
Thank you, Salim bhai. I think we did pretty well in terms of taking positions for the last few years, and this year is the same. Like we took early advantage of building a liquidity reserve, so that we can support our businesses going forward across the year. So we took early position and keep ourselves healthy, and we do expect that going forward there will be liquidity tightness. So we are in the right position to take advantage of the market and support our business growth as well. On the trading side, like we have been a leader in making market, both from FX and fixed income and other markets. So we are continuously doing that, and we have cemented our position as a market leader in the FX business. On the new product, like we are going to issue our first affordable housing bond. Probably we'll be able to complete by next month. On the government security side, we really optimized our position and de-risked our portfolio significantly by first quarter of this year. And we are now in a position to really build up our position for the future. I think overall, we have been a leader in treasury business, and we are doing that quite successfully. Thank you very much.
Thanks very much, Shaheen. And let's have a quick look actually at our loans to deposit ratio, which I believe is the next slide. I know many of you are often interested in in what kind of liquidity position we are in. I'd like to confirm that we are quite comfortable. 86 point, Shaheen, what is the threshold? 85 or?
Threshold is 87. So we are
we're well under that, number one. So this is in terms of both profitability and liquidity, I think quite optimal. And we of course have a large wholesale borrowing reserve in place as well, which we can utilize as and when we need. If we move to the next slide, this is really an update from Ahmed Rashid Joy, who is head of our credit risk management. Joy?
Thank you, Salim Bhai. Good evening, everyone. In the first quarter of 2022, our NPL increased to 4.1%, just 20 bips higher than the year end, which was 3.9%. But in the first quarter of 2021, the NPL ratio was 4.4%. I mean, during this quarter, our credit coverage ratio stood at 117%, and we provided specific provisions of 540 million taka during this quarter. And corresponding to this, our cost of credit was 64 bips. Now, given this post-pandemic scenario, and since now there is no moratorium, loan moratorium or forbearance is in place in Bangladesh, our entire portfolio is under regular payment terms. Considering all this, we have strengthened our collections and recovery systems. We have increased the team size. We have redesigned their KPIs and incentive scheme, just to safeguard our portfolio. Next slide. This is a 30 days past due portfolio, pan bank wide and also the business segment wide. It's a 30 days past due, 0.1% in Q1. And you can see there is a decreasing trend, and this gives us a comfort since there are no loan moratorium and forbearances are in place. The SME 30 days past due is 5.7%, retail one is 4.8%, and corporate one dipped to 7.5%, which Tarek already mentioned and explained. Next slide. This is the NPL ratio, which I said the BBL ones increased to 4.1% corresponding compared with the Q4 of 2021. The SME NPL is around 3.2%. The retail is 2.9% and corporate is 6.1%. And they are all under normal trends. So that's all from my side. Thank you.
Thanks very much, Joy. Let's get a quick update on another very important area of our bank. We call them alternate banking channels. This will be Najmur Rahim. Najmur?
Thank you, Salim Bhai. Good evening. In line with our business strategy, our alternate banking channels have been providing services digitally, comprising alternate delivery channels, secondly, call center, thirdly, agent banking with 730 outlets, and finally, online banking app Astha with over 230,000 customers. During this quarter, we installed real-time cash deposit machines for the first time and have received overwhelming response from our customers, especially SME customers. We are also in the process of replacing the existing ATMs with new cash recycling machines and state-of-the-art ATMs. In call center, we have started in a limited way of to our customers, existing customers, by deploying virtual relationship managers. A number of initiatives in call centers like empowering staff for retention of credit card and personal loan closures and converting installments from retail purchases at special rate continued. In the agent banking space, we worked on agent monitoring and agent skill development with the help of technology this quarter. We have added nearly 25 agent outlets during this period with more services for our SME and corporate customers. In our mobile banking application Astha,
We have observed the increased fund transfers in terms of both numbers and volume to other banks using NPSB, BFTN, and RTGS channels. Moreover, services like opening fixed deposits and deposit pension schemes, credit and debit card activation and blockade, and QR code-based transactions using Astha mobile app have been introduced in this quarter. These services are not only providing convenience to our customers, but also reducing the dependency of call centers to low-cost internet banking channels. These banking channels are not only cheaper and faster, but also provide better customer experience with robust control of the transactions. And moreover, these are scalable. And so our objective is to actually migrate from the paper-based transactions, manual transactions, to alternate banking channels. For the last couple of years, we are moving into this direction to achieve our bank's overall strategy. Thank you.
Thanks, Najmur. As I mentioned, this is a very important agenda for the bank, the move away from paper and analog transactions towards digital and alternate banking channels. That is working very well. What I'll next do is take you through a few slides which portray our balance sheet, and then after that we'll listen to our CFO Masood Rana talking about the actual financials. So if you look at the next slide, it will give you a sense of how all three businesses are growing in terms of deposits. Overall deposit growth rate annualized for the first quarter is 20% plus. And we look at the next slide, segmental deposits, 52% is from retail, and 30% an increase is from corporate banking division, which also bodes well for us as the deposit mobilization campaign, the business in that area is now very strongly focused on transactional banking products and services. Next slide will give you a sense of our CASA mix at 53%. I think it's still very attractive, a little less than what it was last year. And that is also a function of the increase in interest rates, particularly since February onwards, and also is a function of the fact that we're growing very strongly and are actively marketing term deposits. Next slide, Dave. Loans and advances also growing at an annual rate of 20%. We're very positive about growth, not only in SME and retail, which is what most of you would have seen over the last few years, but we are also starting to grow selectively in corporate banking as well. Next slide. And you can see that the corporate bank has grown to 30% of the portfolio. Retail has grown strongly in the last 5-6 months, which is why you'll see that it's moved from 18% a year ago to 21%. And the SME business is just slightly under 50%. Next slide. This is a big challenge for us. You will notice that our spread has dropped from 55% back in 21 to 4.4. That's a 60 bip drop in a year's time. And that is the single biggest challenge for us going forward as well. It's a combination of the higher inflation, the overall rise in interest rates, the increase in commodity prices, and also, I must admit, our increased deposit mobilization, despite the fact that we are growing assets at 20% plus. You'll have noticed that our AD ratio is still just under 83%. So we've been very active in the deposit market as well. And that has also contributed to a growth in term deposits. Next slide, and we'll actually get into the financials, and I'll ask our Deputy Managing Director and CFO, Masood Rana, to take over from here.
Thank you, Salim Bhai. Good evening and Assalamu alaikum, everybody. I think Q1 in terms of our performance, I think bank has done pretty well, and we are quite happy the way we have performed in the first quarter. I think I must, update you. We have embarked on a new journey of our new strategy. Late last year, our board has approved a new strategy, and we are actually actively pursuing that. In terms of our strategic intent, the Q1 actually reflects the way we wanted our business to grow in future. Having said that, this I think Q1 in terms of our strategic intent, it's quite a good success. However, I'll come to the financials. I think this success, underpinning this success, has been particularly the way we have invested in last couple of years in our company. And in terms of this investment, we are becoming better and stronger organization. And most of all, as I said, we have now a clarity of our strategic intent. So we are pursuing that. To start with, we can see that our revenue has grown 2% in terms of a quarter from December to the first quarter. However, if we look at this 619 crore or 6 billion income, I think I can tell you the net interest income, if I divide it into two portions, the interest income and the interest expense, our interest income has grown by about 16%. On the other hand, the cost of deposit or the cost of fund has increased by about 15%, almost neck to neck. But as my colleagues have mentioned, our CEO has also mentioned that yes, there are pressure on the COD, and likely so. But I must say there are some deliberate strategy for us to also, since we are running on a growth strategy, we are actually making ourselves capable for this growth, and therefore we have deliberately booked some long-term term deposits, as Tarek was mentioning in his piece, that yes, we have been able to book some good quality deposit, top-notch corporates, and for a very long term. So this will actually support the strategy that we are working on. If we look at our loan portfolio, on the first quarter, it has grown by about 5%, which is an annualized basis 20%. On the other hand, to support this, you can find that deposit has also grown by about 7%. Annualized, it will be around more than 20. Yes, it's a 25% more. So overall, and the overall balance sheet from the last year when we closed, we have grown by in the size of our book about 5%. Annualized is also 20%, and we believe we can do it. And in doing so, you'd see that some of the financial metrics has been soft since the full year results. Like ROE has dropped by about 26 basis points, ROA has dropped by about 14 basis points, and mainly because of the equity base and with the constant pressure of this incremental COD. So this has impacted. Like if I look into the earning per share, this has also gone down a bit, but this is also resulted from the the number of base of our shares. Joy mentioned about our coverage, which still is 170%, slightly less than the last year closure. However, we have been continuing investing in our people, in our infrastructure, and our technology. We still believe there are many good things yet to come. We'll be rolling out a few of the major projects under our technology in the second half, which will actually translate to our top line. However, as we speak, in the end of quarter one, we can see the cost to income ratio has touched 57%. We ended the year at 53%. There has been 4% increment, predominantly from the cost of deposit. If I exclude the cost of deposit from this scene, we can find that our OPEX versus the revenue remains 40%. But I must say, in the coming days, yes, as I said, we have been continuing in investing in these particular three areas. We would see that it will be a bit higher. But we understand once this, the investments start giving the return, it will normalize, and we hope to see and firmly believe that this will come within 50% by end of 2023. But this is the period that we will continue investing that in our infrastructure, people and technology. Our cost capital adequacy ratio has been a bit soft. We ended the year at 14.4. It's now 14.14, predominantly for the growth that we are pursuing. And we have discussed that spread has gone down from 5 to 4.4%. Our NEV has increased from 35 to 37. So this was the bank standalone performance. If we look at the overall consolidated performance, our total revenue grew by 5%. Besides our own piece, actually bKash has significantly contributed for this piece, and more or less the assets overall book size is kind of more or less here and there. But if we look at the profit after tax, it was 134 for the standalone company. Overall, it is 97. If I may go to the overall, share of our subsidiaries, I'll touch upon. This is the picture of what has been in the Q1. I think our subsidiaries are doing well. While for EPL investment for Q1, it will turn around, and we have strong projections. By year end, it will come within the profit. Brokerage is also doing well, and bKash, I can see bKash CFO has joined us, and we'll hear from him on the bKash piece. But just from my side, yes, we have had our piece of the negative earning from them, but I think they are pursuing their strategy as well, and on the growth strategy. So it will be detailed by Moin Bhai. I think I would like to conclude here, and we'll be happy to answer your question, if any, at the later part. Over to you, Selim Bhai.
Thank you, Masood. Could we now get an update from the CFO of bKash, Moin, please? Moin, over to you.
Thank you. Evening, everyone. I'll give you an update on what's happening with bKash, or rather what's happened with bKash in the first quarter of this year. So to begin with the number of customers, so we finished the first quarter with 60.3 million customers, and at the end of same time last year, we were 52.4 million customers. We added roughly 8 million customers year-on-year basis. In quarter one itself, we added 3.1 million customers in the portfolio, which averages to around 34,000 customers joining the platform every day. Moving on to active customers, and these by active we mean 90 days active. So we were 35.8 million customers were active, which translates to 59% of the total subscriber base being active. This active number has significantly gone up compared to last year. The same 59%, what is today, was 44% last year. So there's a significant jump from there. In terms of market share, 75.4. We've been maintaining 75% market share through the year. So that's despite fierce competition, we've been able to maintain our 75% market share. The number of merchants, 267. This has marginally gone up compared to the same time last year. We were at 242,000 merchants. We've been acquiring more merchants lately, and our strategy going forward is to focus on payments. So we'll be focusing on acquiring more merchants, particularly at the small ticket size merchants. Number of 547 billion takas is the average monthly transaction. To give you a perspective, that translates to 1,760 crore taka being transacted on the platform every day. And this number, same time last year, was 450 billion. So we've increased by about 25% this transaction over last year. Number of agents across the country was 278,000. This was 292,000 agents. So this number has actually gone down, and which just goes to say that we are rearranging the geographic area, and this is just a indication of that we are trying to be efficient in terms of managing the agent network. So that was a key snap into the high level health parameters of bKash. Overall, we are going in the right directions. I'll just quickly touch upon the financials. If we could go to the next slide. Okay, so the top line, we did 899 crore taka was our top line turnover, which was an 18% growth over last year, same time last year. Net revenue was 786 crores. Cost of services increased by 21%. So you would notice that gross revenue increased by 18% and cost of services increased by 21%. So the incremental revenue is being taken up by cost of services. This, what it primarily means is this reflects the investment that we are making behind the agent network. As most of you would know, there's fierce competition in the market, and agent is a key element or key part of this entire mobile financial services network, and incentivizing the agents to get volumes is very important. So a lot of investment has gone into maintaining that agent network. Gross profit was 23% or 182 crores of the net turnover. Same time last year was 25%. So there's been a degrowth in the gross profit. Operating and administrative expenses has gone up by 30%, and the primary driver of this is technology spend and depreciation. Those are the reasons why that's gone up. Commercial expenses gone up from 59 crores to 70 crores or 18%. And the primary driver here is the incentives that we provide to establish, our market share, and so it's this in the form of cashback, cash outs, incentive that we give. That's really the primary driver of this expenses. Coming down to operating profit, so that resulted in a 62 crore taka net operating loss. And net finance income is the income that is generated from our own capital. As you would be aware that SoftBank made an investment in December last year, and so this increase from 3 crore to 31 crore is a reflection of that funds coming in. So that's really how we reach a profit before tax of 31 crore loss from 19 crore loss. Yeah, I'll stop there.
Thanks, Moin. Please do stay with us as we move towards the end of this particular disclosure program. We'll have a 15-minute Q&A, question and answer session, and perhaps there'll be questions on bKash. But I would like to wrap up from a BRACBANK perspective and give you some messages to put all this into context. So the first quarter has been a quarter that is very much aligned to our overall growth strategy. As our CFO Masood Rana told you, 20% plus growth in customer acquisition, in deposits, and in loans, which is very pleasing to see. 40% plus growth in non-funded income, 18% plus growth in net interest income. And this is despite a move away from treasury investments into pure customer lending. So you see that treasury investments have revenue has dropped significantly there, but that too is a function of how we have divested that book and are moving into standard or traditional customer lending. So those are big positives. Challenges, obviously costs. have gone up by about 16%. Staff costs, particularly, that to an extent is a function of the regulatory environment as well. Operating costs have gone up by 12%. Again, that too is a function of the overall macroeconomic environment. Provisions are still strong, as you heard from our head of credit risk management. Our credit coverage is still around the 64%, I think 117% of NPL. So we remain very conservative in that area. And perhaps towards the end of the year, there may be some positives coming out of that area in terms of more recoveries and collections, but also perhaps a lesser need to have such high levels of credit coverage. Overall, we're quite satisfied with the first quarter. The biggest single challenge, as I said earlier, remains our spread. That has dropped 60 bips below 21. In 2021, same time, we had a spread of around 5%. That has already dropped to 4.4%. And there is obviously potential for that to drop further as interest rates keep on rising in the second quarter. But that is what we will talk about when we meet you next time. At the moment, I'd like to stop and just reiterate that it has been a good quarter. It has been a quarter where our overall 3-4 year or medium-term growth strategy has been validated. We are capable of growing at 20% plus, and that is the benchmark that we have set ourselves over the next 4 years, to grow 20% plus every quarter. Again, I will stop now, and Dave, could you tell us if we've received any questions from our stakeholders?
Thank you, sir. We have received a couple of questions from our stakeholders. Should I start with the bKash first?
Please, let Moin handle those.
The first question that we received from our stakeholder is that why bKash is not growing faster than the market, given that the superior technology, management, and ample cash to burn? Moin bhai.
I would bKash is the fact that we have maintained a market share of 75% is a reflection of the fact that it is growing as per the market, and you know, we've got 60 million customers. Our transaction per day transaction is, as I said, was 1,765 crore. So the market is growing at the same level as bKash is, and hence we've maintained our market share. If you look at the numbers, same time last year we were 75%, and we've maintained that 75% market share.
Thank you, Moin bhai. Second question that we received from another investor, which is that what are the major changes in management KPI post SoftBank transactions, or you can say the post SoftBank entered in the bKash management?
Well, as you would see, our share of revenues coming out from cash out has traditionally has been the most traditional product, and you know, 5 years ago, actually not even 5 years, in 2020, 82% or 83% of our revenues were coming in from one single product, which is cash out. That same number stands at 76% today, and despite volumes increasing, the proportion of cash out is declining, and this goes to say that we are focusing on other products like bill payment, airtime, savings. So the strategy coming out from the investment after SoftBank essentially remains the same. That was always our strategy, but it's to expand the entire ecosystem and making sure that the wallet is used instead of a simple cash in and cash out. So that's the strategy going forward.
Thank you, Moin bhai. Next question is that Central Bank has set up a 100 crore fund for mobile banking loans. then what is the rate for this refinancing fund?
Well, as things stands today, we did start a loan facility in partnership with the bank. We are still going very soft on that. We are learning as per, we're just learning as we go. And it's really we haven't even communicated that. And so the refinancing part is being taken care of by the banks rather than MFS operators directly, because as MFS operators, we're not licensed to give out any credit. It's the banks that do the credit. So the refinancing part announced by the central bank is something that's be dealt with the banks.
Thank you, Moin bhai. That's the question that we received for the Bikash. We have a couple of questions regarding our economy and market. So I would like to ask Shaheen bhai to answer this. Shaheen bhai, what is the current situation of BDT and USD liquidity in the market, and how Bangladesh Bank managing this liquidity?
Okay.
Shaheen bhai.
As I mentioned earlier, liquidity situation is getting tighter, and you would expect to see even tighter liquidity condition, mainly because we are seeing higher demand for loans and advances than the growth in deposit. So to really curb down higher demand and to track inflation, I think central bank is rightly moving forward with higher interest rate environment and tighter liquidity condition, and that would probably continue going forward as well.
Okay, thanks, Shaheen bhai. Another question is then, what is your expectation regarding government borrowing, given that the budget deficit is expected to swell?
Yeah, that's a difficult question. I think we are all waiting for the next budget to be declared. And if government continues with this kind of budgetary support or deficit financing, I think then government has to really borrow a big amount to support the budget next year as well. So either they have to cut down development budget and other expenditure to support this deficit, or they have to pass on some of the expenditure or subsidy to the general public. So we really need to see how much this subsidy going in the account of government and how much going to the public. So that's the difficult balance they have to maintain.
Thank you, Shaheen bhai. Sir, we have received some couple of questions regarding our business. So I just
Please go ahead.
Which sector in corporate, SME, and other areas of retail are growing? Specifically, product.
I will ask the individual businesses to respond to that question. Let's start with retail banking. Mahi?
Yes, in terms of retail banking, we are growing in various products and segments. For example, in the retail assets, as I mentioned in my earlier message, is retail loans are growing significantly, and we are focusing into different sub-segments such as Dishari for teachers loan. We have also introduced affordable home loans. So there are various sub-segments, and there's another student banking, student financing, which is called Agami, along with our focus on the Tara women banking. So there are a lot of particular focus on the asset side. On the liability side, also we are focusing on certain segments like the introduction of the multi-currency debit card, which is where we are encouraging the foreign transactions for our deposit customers, as well as freelancers is another segment where we are focusing to grow our retail banking business. So those are some of the key products or the segments which are growing now. Thank you.
So essentially, almost every product and service those that we've had in the past, and a few new ones in retail as well. Shall we move to SME, Tomal?
Thank you. In SME also, as you know, that we are a leader in small business financing. So we continue to do so. And in small business financing, we see tremendous growth everywhere, specifically in all sorts of trading businesses. And also we have started a new emerging small segment, which is a relatively lower ticket loans. There also we see a lot of demand, which actually shows that the economy is reviving from the COVID-related impacts. And on the liability side, we are engaging our branches more and more and designing some liability products so that the SME customers actually feel more comfortable in doing their banking transactions with our bank. So that is in the making. And I think by Q4, all the measures that we have taken, we will be seeing a good growth in capturing the liability side of our customers.
Thank you, Thomas bhai.
Thank you. Tariq Rifatullah, where do we see the growth in the corporate banking business?
Okay. Actually, our objective and our business focus is very much already updated and articulated. We are focusing not only in lending relationship. Actually, you are focusing on cash and trade. So in terms, you can say transaction banking is our main focus. That is reflected in our performance as well.
Thank you, Tariq bhai.
Thank you.
Next question is specifically for the SME part. So Tamal bhai can answer this question. So Tamal bhai, what is the current loan rate on SME? There is severe cost of deposit pressure, and how long do you expect SME lending will be viable under this current lending rate cap?
Actually, there is we have no options but to charge 9%, and for the entire SME portfolio, we charge 9%, which is the highest cap. We can't go beyond that due to the regulations. But in terms of deposits, if you see the SME deposit side, there the cost of deposit is pretty low, but the pie of the SME deposit is smaller. As I said earlier, that we are giving our all-out efforts, and there are certain strategies through which we are going to grow the transactional deposits in SME business, and that will help to reduce the COD and also make the lending at 9% viable.
Thank you, Tamal bhai. Next question is on overall bank performance. So it is that what are the expectations for cost of fund and NIMs by the end of 2022? And is there any possibility to resolution in the 9% lending rate cap?
So it's difficult for us to project what is going to happen over the next 2-3 quarters. We can clearly see that there is increasing pressure on spreads. The challenge is the fact that in this kind of environment, the normal monetary tools used to combat inflation would be to raise interest rates. But with a interest rate floor for term deposits and a interest rate ceiling for lending, all forms of lending, it's difficult to see how the pressure can be released. I would like to share with everybody that there are increasing calls for the relaxation or a total withdrawal of these interest rate restrictions. We've seen a lot of debate in media, on social media, on television, in newspapers, and there has been some discussion even in the central bank about removing these pricing restrictions, particularly interest rate restrictions. We'll have to wait and see what transpires over the next 6 months, whether there will be any kind of relaxation or a complete withdrawal. But there is no doubt that unless that happens, it is difficult to see how inflation can be reined in.
Thank you, sir. Next question is on our asset quality. So the first question is what is the outlook for NPLs in 2022? From our presentation, the investor would like to say that it has increased in quarter 1 22. Can you give us a sense of loan loss provision expense for the full year?
Again, it's difficult to project something like that over the next 9 months. But I would like to emphasize that we remain very, very conservative. As you know, we're 117% of all NPLs are covered. We have a credit coverage of 64%, which continues to be double what it was over the period 2016 to 2019. And this is much more conservative than what the central bank's minimum requirements are. What I can say after the first quarter, and I'll ask our head of credit risk management to provide some more color to my discussion. What I can say is that while all forms of forbearance have been withdrawn, and there are still some customers that are coming out of that challenge, the fact that there are no real surprises in our book gives me comfort. I do not see the situation worsening very dramatically over the next 7 to 8 months, or over the next 3 quarters, unless something really untoward happens.
Yeah, thank you, Salim Bhai. I would like to add that, I mean, the surprises don't come from the retail and the SMEs. These are granularities. The big tickets give surprises. So what we have done is that in the Q1, we have done a thorough analysis of the corporate banking portfolio. And we have reviewed all the earlier accounts, and we don't see any big surprises from that segment. So that gives us a comfort that the NPL ratio will hover around 4.1% to 4.20%. The number that you mentioned is increase is only by the 20 pips compared with the last quarter of the year end. But this 4.1% ratio is consistent from pre-pandemic level. As I said, 2019, in December 2019, the ratio was 3.9%. So after that, you see so much of dent has been done in terms of macroeconomic situations due to the pandemic and this moratorium and forbearance. And even after that, the ratio is 4.1%. But you would also I'd like to point you out to the 30 days past due ratio of 6.1%. That gives us a comfort, and there's no spike on that. And with regards to the cost of credit, the amount that we have provided in the Q1, the remaining year, that will be proportionate. Only that I can mention.
I think I'd like to add here. I mean, as Salim Bhai said, we have been very conservative in last 2-3 years. And as an organization, we like to be conservative in this aspect. However, like last year or before year, we have taken 130 basis point even. But this year, as you can see, this is only 64 basis point. Why? Because we have granularly reviewed our book, and with the outlook and all, we are actually building. I would say the actual, credit cost would be around 40 or 42 basis point, and 64 is actually still we are within this space we are buffering. So, and I mean, I think that tells you the story about the confidence that we have on our book. But given the situation, yes, on the corporate side, God forbid, touch wood, nothing goes, wrong. And we hope that everything remains as is. And we are pretty confident that the way we are, projecting or building our credit shield, I think that will cover unless, anything massive happens.
Thank you, Masud Bhai. We received a couple of questions regarding our cost. So first question is that we have seen that Q1 OPEX has increased. Does it a reflection of cost pressure that we can expect for full year 2022?
Businesses, all departments functioning fully in a strong growth mode as well. Many new products, services, increased focus on digital capabilities, etc., etc. A lot of investment in technology continues. And not only that, but a lot of focus and investment also in our transaction banking businesses. So overall costs have gone up, but we are confident that these costs are going to help us improve not only our capability right now, but our overall capacity as well. At the same time, those costs are a function of the environment too. Utility bills, inflation, that has gone up. Most commodity costs have gone up. So there are challenges in that area as well. And of course, staff costs have also gone up. We've provided some, I think, some much needed increases to junior level staff in non-management staff in the first quarter of 22. and I believe that is a positive for the bank, not a negative. So going forward, if we can continue to grow our balance sheet, I believe that our cost income ratio will gradually taper down to closer to the 50% mark. Perhaps not to exactly to that level, but I do not expect, I do expect a reduction from the current levels that we have.
Thank you, sir. We have the last question, and you have already answered that part of that question. The question was that, what will be the impact of the new pay structures on bank's profitability?
There will be an impact, no doubt about that. I cannot get into exact figures right now. There will be an impact, but rather than looking at it in a negative perspective, I do believe that the increase in salaries for entry-level staff, which has a significant impact on a bank like BRACBANK, where almost 90% of our team members are in what we would call the non-management staff category. So this impact is really on the first two job grades, what we call officer job grade 1 and job grade 2, entry-level officers. It is a large impact, and it is something that we will have to carry through into the next year as well. The fact remains that it also brings many positives in terms of motivation, in terms of productivity as well. We've already seen that the behavior of our staff, customer service, customer experience efforts have all improved significantly. So I think rather than looking at this in a negative manner, we should look at it positively and leverage this improvement in junior staff salaries and take this forward towards the achievement of the bank's overall vision and objectives.
Thank you, sir. These are the all questions that we received from our investors. So thank you again. Thank you all.
Thank you very much, ladies and gentlemen. We look forward to seeing you again in about 3 months' time. Goodbye and assalamu alaikum. Good night from Dhaka, Bangladesh.